welcome everyone. We'll go ahead and get started. My name is Tracy Tunwall. I'm chair of the business department and coordinator of the human resource management major at Mount Mercy. So we want to welcome all of you to our annual Barbara A. Knapp Business Speaker Series. I would like to welcome all of our students, staff, guests to tonight's event. We have a number of community partners who joined us this afternoon for a reception and some who came just this evening. So we want to be sure that we welcome all of you. We're so grateful to our many community partners. They support us with their expertise, internships, speaking in our classes, employment and scholarships for our students. So we greatly appreciate your support. I'd like to introduce you to another important guest, Barbara Knapp, who is here with us this evening. Barbara is a member of the Mount Mercy Board of Trustees and established the Barbara A. Knapp Endowed Speaker Lecture Series in 2004 to provide speakers on business-oriented topics that are of interest to students and to the broader community. So we would like to thank you very much for making this annual lecture possible. So Barb, if you would stand, sir. And Barb is joining with her family this evening too, so welcome. We're very glad to have you here. Which of course brings us to our speaker for this evening, Dr. Fred Croop. I had the pleasure of hearing Dr. Croop speak at a conference in Dublin, Ireland, and we were thrilled that we were able to secure him for this year's event. Many of our students will work for or serve on boards of area nonprofit and volunteer organizations. Dr. Croop's extensive experience and research highlights the attention required for responsible fiscal management. Dr. Croop offers some simple solutions to the most common problems of volunteer organizations, which protects donor funding as well as organizational reputation and solvency. Dr. Croop is currently a professor of accounting at Misericordia University in Pennsylvania. He has a doctorate in education, an MBA, a BS in commerce and finance, is a certified public accountant, licensed continuing professional education provider in the Commonwealth of Pennsylvania, and a certified management accountant, and I could go on. In addition to his contributions to higher education, his professional experience as an accountant has spanned over 4.5 decades. So please help me welcome Dr. Fred Croop.
Okay. Thank you very much. Thank you for allowing me to be here tonight and to share with you some thoughts, some experiences, some learning that I have been a part of over the last, I'd say, 6 or 7 years, specifically with nonprofits and volunteer organizations. But that experience has come from the fact that I have been an accountant, a controller of nonprofits, a CFO of nonprofits. I have audited nonprofits. And that experience has allowed me to talk tonight about working these last few years with nonprofits, mostly in the Commonwealth of Pennsylvania, but I have traveled throughout the country to do things like this, to talk about the issue that I'm glad you're here to hear tonight. And I hope it is of interest to you. Thank you for having me be here. I love the snow. We haven't had any snow where I came from yet. I always like the first snow when it's falling just like it is. When it's dusk and dark, I've told a few people, so it's great to be here. When I left the airport yesterday, it was close to 70 degrees. When I landed here last night, it was closer to 20. So I like it cold. I keep my office cold, so again, your hospitality is very much welcome. Why am I here? Why did Tracy hear me and decide that I might be a worthwhile speaker for Barbara Knapp's Speaker Series? And she is great to provide this to Mount Mercy. Well, again, the topic will be addressing financial mismanagement in volunteer and nonprofit organizations. And to start, why did I get involved with this? Well, I'm a faculty member, and as that, at this point in my life, I want to do service. I'm required to do service. We can do service as faculty members to the institution we're in, and I certainly do that and have over the years. We can do it in a number of different ways. But I think it was about 6, 7, 8 years ago, I just got tired of reading in our local news media about parent-teacher organizations, volunteer fire companies, youth athletic leagues, I mean, all over the churches, all over the place, where money is missing, money is unaccounted for, money has been taken. And as an accountant, with the experiences that I've had over a career, I know that simple accounting controls, internal controls, would at least minimize the problem, if not eliminate it in many cases, and minimize the damage to those who are supposed to benefit from the monies that are raised and supposed to be used from a nonprofit for the purposes, the causes for which it has been formed. So, I started out by writing some op-eds in the newspaper about how we should do things differently in newspapers throughout Pennsylvania. That wasn't good enough. It wasn't getting anywhere. All I was doing was writing. So I started to meet with county district attorneys, legislators, others, and say, here's a problem. We need to address this problem. And they're very receptive to looking at that problem and what we can do about it, and they've been very cooperative. I traveled throughout the state of Commonwealth of Pennsylvania doing seminars, trainings, we open them to the public, usually hosted by a state legislator and or a district attorney. We have 67 counties in the state. I've worked with more than half of them along the way, about 40 of them, and have offered to work with all of them. It's just logistics whether I can get to them all. And I try to teach people why we need controls in place, what the consequences are, and how simple the controls are to put in a nonprofit. And that's what I have done as service for quite a while. So you have allowed me to be here tonight. First, let me define what I'm going to use. It's not the definition of financial mismanagement for the purposes of what I do. Financial mismanagement is the unintentional poor handling of finances, just not handling them well, causing a bankruptcy in a nonprofit or a volunteer organization, causing it to go out of existence, or purposeful fraud and misappropriation of assets. Usually those assets are in the form of cash, but they can be other assets. So just to put it in perspective, I'm not going to read this whole thing, but to try to convince legislators that this is a problem that needs to be addressed, these are some of the stats that I use. 1.6 million nonprofits registered in the United States. Those are the ones that are registered. There are more than that that are not registered, the very small ones, the parent-teacher organizations like I mentioned, and many organizations that are not registered. These are the ones that are registered. Just with the ones that are registered, it represents 6% of our gross domestic product. It employs 10% of the workforce in the United States. 9% of the wages are earned by those employees of nonprofits and organizations, and involves 110 million volunteers. Those are the ones we can count. In a recent year, 120 organizations filed for bankruptcy under Chapter 11. That was the only stat I could find about that part of mismanagement, causing a bankruptcy. I do think there are better statistics that would represent the magnitude of that problem, but I don't want to do something that I cannot verify. And at the end of this presentation, there's a bibliography of where I got all of this information from. So what does that amount to? On the average, a nonprofit organization loses 5% of its annual revenues due to embezzlement, which is $425,000. Now, let me tell you, what I'm doing personally is working with very small nonprofit organizations and volunteer organizations. So this would be nonprofits of all sizes and would be the averages. In our state, we do have an organization, and I'm on that board, that is entitled Pennsylvania Association of Nonprofit Organizations, PANO is what we call it. They are great, and I'll have a slide that I'll go over very quickly, at supporting larger nonprofits like a University of Mount Mercy. But there's a gap with these small organizations where money is missing, and again, all the implications of that missing money, and that's where I focus my efforts. But if you look at organizations of all sizes, it's a pretty sizable figure that we're talking about on average. And as I just mentioned, many of these nonprofits are not registered. They fly under regulatory radar. And if you also understand that it has been researched and proven that 65% of the fraud and theft in these nonprofits is never reported. They don't want the bad publicity. They don't want their donors to stop giving because they didn't keep track of the money. There are all kinds of reasons. They don't want to hurt the family and the person who perpetrated the crime. And they just want the money back. So 65% of the fraud is not reported. Lack of adequate internal controls and the override of weak internal controls, I'm an accountant, have been found to cost 60% of the problem. So that's where I'm going to focus what I talk about tonight and what I try to do in my way to address this issue wherever I can. So what can be done? So for example, in my research of what I'm doing in Pennsylvania, working with district attorneys, doing some of the investigative work afterwards, but definitely working with them, looking at the cases that have happened, whether I'm doing any investigative work or not. Just one internal control that many of you know would have eliminated more than half of the problem. Even if they didn't do all the other controls that we teach our accounting majors in our colleges, that we have in place in larger organizations. And many of you deal with those internal controls. Sometimes they're a pain, but you do follow through with them. If we just do one in these small organizations, it would eliminate more than half of what I have found has happened. And that is a bank reconciliation once a month. Most of you probably know what a bank rec is. You do it maybe personally. And nonprofits should do it also on any account that they have, checking, debit card, credit card. They should do monthly bank reconciliations. And it should be done by somebody who does not handle the cash. When an organization I go into does do a bank reconciliation, these small organizations, typically it's being done by the treasurer or somebody who keeps the books. That doesn't provide any checks and balances against what may happen, whether it's purposeful or unintentional. So we want that bank rec to be done by somebody who's independent of handling cash. Even when the situation gets out of hand and somebody is stealing money, the magnitude of the loss is cut significantly if this one internal control is in place. So I'll give you two examples. Two volunteer fire companies within a few miles of where I work and where I live. One volunteer fire company has one major fundraising event, a very popular fundraising event in June of the year. A couple of years ago, maybe 3 years ago, they had that event. They raised a lot of money. The weather was nice. They had a good turnout. And within 1 month, their treasurer had stolen $45,000. 1 month. But their fire chief, not due to anything I said to him, I talked to him about it afterwards, not before. What he did was monthly bank reconciliations. He stopped it at $45,000. They had bonding. They had insurance. They had ways to recapture at least 30-some thousand of that. The treasurer is paying restitution for the rest of it. So they will get their money back. They have gone on to protect their community in fires, from fires in that way. On the other hand, there's another volunteer fire company, a mother and daughter. Nobody was watching for something like 8 or 9 years. Over that period of time, it's not a very large organization, but they do have to raise a lot of money to buy the equipment, very expensive equipment that emergency service organizations need to have. They stole $700,000 because nobody watched and it went on so long. It was a mother and a daughter who did it. Nobody was doing any bank recs. Nobody was watching at all. They didn't get that money back. That organization went defunct. That community now has to rely on neighboring communities for its fire protection with a longer response time. What that means, I don't have any quantification of if that longer response time and what the impact it has on the community, but it is the way that it has turned out. So I put this when I'm doing these trainings for the board members, officers of small organizations and volunteer organizations. Whoever is the governing body has a fiduciary responsibility to make sure that there are internal controls in place. They have a lot of fiduciary responsibilities, but this is one of them. If you're volunteering your time on a board, if you're volunteering your time in this way, and something goes bad, the organization gets sued, they can't pay its debts, you do not have to personally make up what has been lost, as long as you have carried out your responsibility the way that you're supposed to carry it out, which with being board member means that you have to watch the store, you have to have these internal controls in place. I use this to try to sell this to small organizations where they don't want to do bank recs and some of the other things we might talk about tonight. They don't want to take the time to do that. They volunteered because they're passionate about the cause of this organization, about what they're doing. They don't want any additional business or accounting work. But I try to convince them that it is their responsibility, first of all, because they don't want the money not to go to where they want it to go, their passion. But second of all, because they are responsible to make sure that we have these controls and we watch the store in place. I'll be honest with you, if we look up and try to find how many legal cases have been filed under the fiduciary responsibility of board members, there are very few for nonprofits. It just isn't something that is pursued in that way. But I don't say that to the people I'm trying to convince to do it. I stop at that point and don't say that last part of it. So they are responsible. The need in the community. I don't think I need to tell anybody in the room that we need these volunteer organizations. They provide services that governments are not. That governments are providing less and less every year. That others are providing less and less every year. We need what they are providing. And therefore, backing up, we need to make sure the money is there, the money goes to where it's supposed to. And to do that, we need to watch what's going on. I mentioned the Pennsylvania Association of Nonprofit Organizations. It is available for nonprofits in Pennsylvania. Again, I'm trying to complement what they do, and I am a board member of that panel, and complement in my own way what we're doing with smaller organizations. They have a tremendous volume of resources. They do a lot of training. It's a very good organization. There is a membership fee, but it is on a sliding scale. So there isn't any reason that nonprofits in Pennsylvania cannot be a member and benefit from that organization. I looked it up, and this is the first time I've been in Iowa, but Iowa has the Larned A. Waterman Iowa Nonprofit Resource Center, sponsored by the university. Anybody familiar with that, by the way? Okay. And in fact, yesterday and today, if I have the 2 dates right, they're having their annual non-profit summit going on in Altoona. And they do support in Iowa the nonprofits in a different way than PANO does in Pennsylvania. Both are members, though, and endorsed and supported by the National Council of Nonprofits. So, I said financial mismanagement is just not managing correctly or purposeful. Let's look at not managing correctly. BoardSource is an organization that's out there as a resource for board members of nonprofits. It's a very large organization. And the essentials that they say should be in place in every nonprofit include having a board member meeting attendance policy and enforcing it. Those of you on boards of larger nonprofits know that this is almost always the case. Have term limits for board members. Again, larger nonprofits have it, smaller ones often do not. Recruit board members with complementary expertise, and the board should participate in and own the results of strategic planning. That's good management according to BoardSource. The board must approve the annual budget. There must be a job description, agreed upon goals and expectations for the chief executive officer. The full board should evaluate the CEO annually, and they should have an annual audit, preferably done by a CPA firm or some external organization. But if not, what I do training on for small organizations also who cannot afford a CPA audit is how to do internal audits. I've written that up for our State Department of Community and Economic Affairs so they can give it to volunteer emergency service organizations, and it's required if they want a grant, they have to be able to do from that organization in Pennsylvania an internal audit if they don't have an independent audit. Compliance requirements, they have different categories in board source. These aren't all of them. I just wanted to hit the most important ones with regard to financial management where we don't have anything purposely being perpetrated. The board should meet more than the minimum of once a year. Enough meetings should be scheduled to meet the fiduciary responsibilities mentioned earlier of that board. The board should set the compensation and the entire package for the CEO. The full board needs to review the annual 990 tax return. Those of you on board that do file 990s, if you're on the board of Mount Marcy, for example, you do review the 990 annual tax return filed by Mount Mercy. The board must implement policies covering document destruction and retention along with a whistleblower policy, protection for a whistleblower that we see in the news so much right now in other circumstances. Now I'm going to go through these very quickly, but when I'm doing a training, 2 hours, I'm also, as Tracy mentioned, a continuing professional education provider licensed, just like a CPA license, it's the same kind of license in Pennsylvania. And I do 4-hour sessions for CPAs as part of their required CPE. I do 2-hour evening seminars I mentioned earlier. I do training. I did the Points of Light Foundation a couple of years ago, about a year and a half ago, in Atlanta to train all there were a lot of people who showed up that. So I do a variety of length of training, seminars, whatever you want to call them. So I'm going to skip through these pretty quickly, but if I have enough time, the purpose of these is to say what I've worked on, what I've seen, not all of it, but some of them, and what would have prevented it, the outcome and what would have prevented it of these internal controls that can be put in place in a small nonprofit and a volunteer organization. So, $70,000 embezzled from a nonprofit employee benefit association, one person convicted. They allowed, it was a staff person at a state prison, it was an employee benefit fund for the employees of that prison. They allowed the staff member, an administrative assistant, to be both the president and the treasurer in the same person for like 2 or 3 years. It says $70,000, but from what the investigation looked into when they backed into where she spent money and backed into what she probably stole, it was more like $200,000. That was what they could prove. What would have prevented it? Separation of responsibilities between two truly independent individuals. They have the same person. No checks and balances at all. The $700,000 is the one that I mentioned earlier. It was a volunteer fire company. What would have prevented it? Again, separating the responsibilities between two different, truly independent people. $50,000 embezzled from a nonprofit hunting camp. Hunting is a very big thing in Pennsylvania. One person convicted. The monthly bank rec performed by somebody other than the treasurer, like a president of the organization, for example, or some member. $32,000 embezzled from a volunteer fire company. Again, the president convicted, established. And sometimes I vary. Any one of the controls would probably have caught these things that are standard in the kind of businesses some of you work in or will work in soon. They didn't have any. $16,000 from an ambulance association. If they had regular treasurer's report, the person confessed. Again, I'm going to skip over the outcome. $43,000 embezzled from a 2-church charge. These were Methodist churches. I taught this young man. He was then a professional accountant. He became the treasurer of Methodist church, where there were 2 churches as a part of the same charge. I would have trusted this person with my life, literally. He was one of the best students that got married young, had a family. I would have never suspected that he would do this. He had a gambling addiction, stole $43,000. His in-laws did restore the money, and he didn't end up in jail, just with some other issues. We should have two people counting cash receipts together and signing that they are responsible for the cash that they say have been taken in. Always have two people. We'll see that a little later on. Counting cash. $45,000 taken from the youth soccer league. This was a husband and wife. They'll run the soccer league, and a lot of people, they'll help out, but they don't want to run it. They ran it, and they ran it into the ground. It no longer exists. Again, separation of responsibility between two people who are not related. $175,000 embezzled from a Lutheran church. Two people pleaded guilty. At the time I wrote this, they were awaiting sentencing. They have been sentenced since then. It was the husband who was the chair of the board, and the wife was the treasurer. Once again, separation between two people who were not related in those kind of functions. Undetermined amount of money missing from a cemetery association. I include this one in here because of the result. The treasurer plea bargained to have these charges dropped when she confessed and was sentenced for embezzling from from a local government entity, from somebody else. Rotation of treasurer duties every 5 years. Of all the things I try to get organizations to do, this is the one I get yelled at the most for. He's our treasurer. He's been our treasurer for 20 years. There's nothing wrong. We trust him implicitly. We should not change treasurers. He's willing to do it. I resigned from the board of a medical unit, a medical center, not too long ago, maybe within a year and a half ago. They have the same treasurer since it was established in the 1970s. I know there's nothing wrong. I know, just like I knew there was nothing wrong with my student, I know that there was nothing wrong, but I cannot be part of an organization when I'm out there trying to convince other organizations they have to have rotation of treasury duties, and they've had the same person for almost 40 years as treasurer. Volunteer fire company decertified by the township and now defunct. Again, they don't have this fire protection. Due to the treasurer taking out an unauthorized mortgage on the property of the company, she had access to the deed, and she used it to borrow money to gamble, and they lost their fire company, and they were decertified by the township in which they operated. One person convicted, restriction of access to assets, checks. You always lock up checks. You always make sure that somebody can't take a check from the middle of the pile. That's why you do bank reconciliations, which is a common way to perpetrate a fraud. This was one I talked about where I said the president, he was also the president, but it was the fire chief, he's both, did the reconciliation, $30,000 embezzled from a club. I kind of mix it up here with preventions. This would be an annual audit, including an internal annual audit. So then I kind of go through, this is just what's happened in the last few months, so to speak. And I don't have them all here. I sent this to Tracy on October 11th. Since then, in my sparsely populated area of the world, we don't have a Cedar Rapids. We have Wilkes-Barre, about 30,000 people. We have Scranton, between 50 and 60,000 people. The rest is very suburban. The rest is rural. I live in a dirt road on top of a mountain. There aren't a lot of people there, and just in that small area, there have been 3 of these nonprofit volunteer issues reported since then, including, and I mentioned earlier, unfortunately, the director of a county United Way in my area who stole quite a bit of money, or at least charged with stealing it, since October 11th. $50,000 invested from a PTO, one person charged and convicted. Annual internal audits or independent bank rec or term limits. Take one, anyone, even if you're not going to do most of them. This is a point where I usually talk about some of the ramifications of these issues. So who gets hurt when anything like these things happens? Well, definitely the organization gets hurt. Sometimes they go out of existence. Sometimes their donors will not give them more money. They're hurt financially. The people who donated money are very upset that they donated money and it is not going to the purpose in which they donated it. The volunteers who worked on fundraisers and worked so hard on the cause of this organization are hurt. The people, animals, or some other cause that was supposed to benefit by these funds don't get those benefits. And as I tried to say a moment ago, we need organizations to provide these benefits in our communities. But this was a soccer mom. This is perpetrated by both soccer moms and soccer pops. This was a PTO, but that type, stereotype, kind of person, $50,000 because they weren't watching. How much money does a small PTO raise each year? It's not $50,000. We're talking 1,000, 2,000, 3,000. They didn't watch for this long that she was able to get away with $50,000. Who was hurt? Well, she was, because we didn't put in place the internal controls that prevented her from being what we all are, human. We all have something that could tempt us. We all have situations we don't have control over. We have a knee operation and need opioids and then don't get prescriptions anymore. We have a gambling addiction. They legalized gambling in Pennsylvania a few years back. This has increased since then. There are any number of reasons that any one of us could be faulted. We're only human. We need to protect people from themselves, but what I'm getting to, we needed to protect her from herself, but her kids, her innocent family who didn't know about this, had nothing to do with it, have to go to school where she stole this money from the PTO. Think about how they have to deal with this every day in school. There's so many people, so many individuals, so many causes that are hurt by these small organizations when it ends up this way. Another PTO, recently, $14,000. Food pantry director, $30,000. $130,000 from a volunteer fire company, one person charged. He's now been sentenced. He was sentenced last week. He is also the same person that they later discovered, because they discovered this one first, who took $14,000 from an ambulance association in the same community. That one is out of existence. They don't have ambulance coverage. The fire company will recover. They didn't have anything that would get back $130,000. They have to re-raise, so to speak, if I can use that as a word, that money. Oh, another ambulance association. I got involved with this one because the state legislator said, okay, they're no longer a nonprofit because this person, over so many years, she stole $300,000, up to $300,000. They haven't decided how much yet. But they did still manage to get credit to buy the necessary piece of equipment they needed. And because they're no longer a nonprofit because this happened, they're not sales tax exempt in Pennsylvania. They couldn't come up with the $24,000 of sales tax on that equipment. So the legislator said, is there anything you can do? There is nothing that can be done. The state is very inflexible on that kind of thing, especially with sales taxes. $16,000 from a volunteer fire company. I worked with somebody who tried to, this for me was very difficult to watch because I worked with a woman who had stage 4 cancer who was trying to get that fire company back in to the good graces with the IRS because they lost their tax exempt status. And we worked, and it was one of those situations where I'm trying to help her and she would get sick every 2 minutes. She was doing everything she could. Nobody else stepped up in the volunteer fire company until she died, and it is still not tax exempt, which means they pay income taxes now. They are a taxable organization. So in every case that I mentioned, when I go through all these things, it's either just one person, or if you recall, 2 related parties that were able to do this. Separation of duties is our overarching internal control in accounting and business. You don't have one person do incompatible duties. You have them separated among at least between 2 or among more than 2 individuals. So, number one reason for stealing from volunteer organizations, lack of long-established basic internal controls. But it's not easy in these volunteer organizations. For those of you who are involved in business, For those of you who are studying or are accountants, you know almost all internal controls are based on separation of duties between at least two individuals, as I just said, two employees, and a physical location where there can be physical safeguards over assets. Many of the organizations that I'm trying to help that operate in all communities, including around here, don't have any employees, or they might have one part-time employee. And some of them don't, like PTO, might not have a physical location. A youth athletic league might not have a physical location. So when I say long-established internal accounting controls that I've used throughout my career and made sure companies use throughout my career, they don't work for these small organizations because there aren't two or more employees in many cases. So what do if we don't have that in place? And these are the consequences. I've kind of mentioned that. Well, I'm a college professor. What do? I get my students involved. We do a lot of service learning at Misericordia, just like Mount Mercy does here. We do hundreds of thousands of hours each year of service learning of all different types with our students. So I got my accounting students involved in service learning to address this issue. How could they address it? They put together, I'll get to that in a minute. And one of the benefits, I sometimes make this presentation to other academics, one of the benefits is that nonprofits, these volunteer organizations, and what we get involved with when things have gone bad or before things have gone bad, gives these students an authentic learning environment. They are learning in real life, not just in a classroom where I'm talking like this. They're learning in real life. So we get them involved. Students gain additional real life. So what did I do with students to start out? I had an auditing class. I gave them a list of CPAs in our area. They divided them up and gave them to them. They called or in some way interviewed those CPAs that would respond to them and asked them what internal controls could work in organizations like this where they don't have employees, where they might only have one part-time. I'll be honest with you, the CPAs couldn't come up with very much. That's not their thing. They don't make money doing that. They make money working for larger organizations, not these small volunteers, but many of them are on, volunteering with their children in youth athletics and in other ways, their churches and so forth, but they didn't help us a lot. I'll be honest with you, and some of them really just wouldn't take the time to talk to these students. This was a summer course, by the way, so it wasn't during tax season or some other time like that. But we still worked on it together, the students and I, and we put together internal controls that can work and are practical. They may not be as effective as standard controls in a profit-making business or a large nonprofit, but they will prevent most of what goes on. And we figured out a way with each type of internal control to have separation of duties. In fact, that one that I mentioned earlier, doing a bank reconciliation, where you have it done by somebody who doesn't handle cash, and it's done every month, and it's reported every month at a meeting. That is what we came up with. They don't have employees. The treasurer, who's a volunteer, is keeping the records. The president or some other member, or sometimes these organizations we've gone to when we've worked with individuals, organizations just can't come up with somebody. They've hired my students to come in once a month and do the bank rec, which is again an opportunity for these students. They don't make a lot of money doing this. They come in once a month. They do a pretty simple bank rec for most of these organizations, but at least we have that internal control in place. A tax class, researched and compiled federal tax exemption of Pennsylvania charitable status organization. When I get calls from state legislators and they have a volunteer organization or nonprofit that's in trouble that has contacted them, almost always it's with the IRS. They have had tax exempt status and they have lost it. They didn't have tax exempt status, they never applied for it, and they were discovered. So we decided as part of what we could provide to the community is this aspect of nonprofits dealing with tax exempt status, how to get it, how to maintain it, and I had a tax class put that together. Intermediate accounting class took this whole thing and did a seminar like this. We had about this turnout on an October night a couple years ago where they put on a seminar 2 hours to do what I now do when I travel throughout the state since then. Every class I teach is required to assess this website. We have all of this on a website. I'll talk about this in a moment. We have all of this on a website that's freely available to anybody. If I printed out, what we have come up with is a manual of internal controls, tax exempt issue kind of things that represents about 60-some pages. Again, we make it freely available in our community area of our Misericordia website. It has been accessed, and I get calls about it from Canada, Australia, everywhere in the United States, in addition to our local area. And it has been written up by Board Source as a resource that is valuable for very small organizations, and they have sent it out to their membership to let them know. This is just a picture where I did a workshop. The woman on the left is a district attorney. There's a partner in a CPA firm who decided to join me for that one, and the woman on the right is a state legislator who hosted it. I mentioned before I had our Pennsylvania Department of Community and Economic Affairs. I did up an internal control manual for them that they use for all volunteer emergency service organizations in the Commonwealth if they're going to apply for a grant. Interesting one that can't make it through our legislative sessions because there's so many issues that our government has to deal with in Pennsylvania, and we have a lot of issues. But she proposed, and then got in touch with me to help her try to promote this, where CPAs would get continuing professional education credit if they did reviews, not audits, but you might know what a review is. It's a step down from an audit of volunteer fire companies. We haven't been able to get that through the legislator. I'm going to be the CPA provider who will look at what they're doing and give them the credit for it. But every 2-year session, we just can't get it through because there are more important things for our legislative branch to do. I go out and I speak to any board meeting who will have me do something like this. I usually don't speak this long, by the way. I take up part of the meeting and just do a sell job, as I call it. You really need to do this. But only an ounce of prevention only goes so far. If you ever have taken an accounting course and you have covered internal controls, we're very honest about the fact that internal controls are not 100% foolproof. But they do prevent a lot of what I'm talking about tonight, but they're not 100%. Therefore, it's important to know what motivates people to steal from nonprofits. Why is it different in small organizations? Again, that's what I focus on instead of larger ones. These are some of the data about that. That last one, by the way, I do want to do research on that, but this was a study that said more females have stolen from these organizations than males. But I'm pretty sure that's because many more females are being volunteers and are willing to do this work than males are. So it's not meant to be biased in any way. And I do want to look that up because I think it's unfortunate that that was a statistic that came out of one of the studies. No one is watching. There was a economic crimes, a white-collar crime detective, and his is my best quote. No one's watching. Why is this happening? What can we do to stop it? No one is watching. Gambling was legalized. I mentioned that. That didn't make it worse. I mentioned opioids and other types of addictions. Now I'm going to go through these very quickly. These are standard accounting internal control. Establish joint responsibility for all assets. By the way, I will make this PowerPoint available. I did make it too long for the time that we have tonight, but I did think it might be a resource, and if Tracy or somebody does want this PowerPoint, I know that we're recording this to make it available for people who might think it is of use to them. I can also make the PowerPoint available. So I'm going to run through these quickly so we get through everything. Adopt and publish rules. Again, I'm dealing with small organizations. They should do that. Make sure everybody knows what they can and can't do, limits of authority. This is one thing I try to convince them. None of the organizations I work with that are that small have a budget. None of them have a budget. They should have a budget. Now here's why I'm going to criticize another aspect in Pennsylvania, and I'm going to compliment Virginia. Pennsylvania has an Institute of Certified Public Accountants, PICPA. I've worked with them and their lobbying branch to try to get some legislation through, but they really don't provide a lot of support as the professional organization of CPAs in Pennsylvania. On the other hand, Virginia does. So at the bottom of this one, I think I have a slide on it in a moment, Virginia provides tremendous support through their CPA organization in that Commonwealth. We should do it in Pennsylvania. I didn't get a chance to see what's available in Iowa. I did look and couldn't find one, but I could have missed it, I have to admit. So if you need to know how to do a budget, you just go to Virginia, look on their website of their CPAs, and you can figure out how to do it. They give you templates. We do the same thing in the manual that I and my students and I have prepared. Okay. Require a treasurer's report at every meeting. Often the treasurer doesn't make the report, they don't question it. Prepare that monthly bank rec we've talked about. The treasurer shouldn't have conflicting authority. Somebody else should be doing things that it represents the checks and balances. And rotate the treasurer responsibility periodically. Never have only one person count cash. I taught another person, it was in an MBA program. He is a CPA. He did steal $10,000 from an Episcopal church because he was allowed, a CPA will let him count the money that we take in on our services, on Sunday services. He stole $10,000. They discovered it, interestingly, they discovered it because whenever they made the bank deposit and they looked at the bank deposit, there were never any, and I'm trying to remember which one it was, $5 bills? I think it was $5 bills. There were 20s, 10s, of the cash that was there in addition to checks that were written. Of the cash, there were never any $5 bills. So they started putting $5 bills in the collection plate, and when it was deposited, they weren't there. That's how they discovered that he was taking every $5 bill. It added up to $10,000 over a too long a period of time. Make all payments by check. Don't just take money out of your money that you take in from a fundraiser, deposit it, and then write a check from the checking account. Now I gotta say this, require 2 signatures on checks. Any bankers in here? Do banks check that there's 2 signatures on the check if it's required? No, they do not, and they tell you they will not. They will not check that there's 2 signatures. It's still something we all recommend. You've heard it if you've ever been involved in nonprofits, have 2 signatures on the check. But it's supposed to be that person doing the bank rec that makes sure that there are 2 signatures, and they are the signatures of the people who have authority to sign checks. It's incumbent upon that person to check that. The bank will not. Avoid the use of credit and debit cards. Again, people aren't going to listen to me on that. You got to use them anymore. But again, you should have monthly bank recs. Have the financial records audited, and as I mentioned, if you can't afford a CPA independent audit, we'll teach organizations how to do an internal audit. Segregation of duties, safeguarding of physical assets like the deed to that fire company that I mentioned earlier. All of this was put together in that manual that I mentioned earlier. I'm not going to click on it now because I want to make sure that we get to see some of the 7th game of the World Series. So, I mentioned to people, I didn't think it would be a problem because I'm still thinking on East Coast time, and it wouldn't be a problem if this were occurring there, and I forgot that I'm an hour different here. So, I'm not going to click on it right now, but it is there. It's a pretty good manual. It's grassroots, but it's a really good manual, and I give credit to all the students who helped me on it. Everything that we would talk about, and I've kind of skipped over very quickly, is there. There's instructions, there's templates, and we will go out and teach our local organizations how to implement anything. I mentioned earlier the Virginia Society of CPA, nonprofit resources. Again, this is just some of the stuff they offer that I don't want to take the time to talk about. I have not been involved in anything that's been discovered and reported that's been under $2,500. Even in the smallest organization, by the time they find out that something is wrong, it is added up to more than $2,500. The reason I mentioned $2,500, that's the threshold, the financial threshold for a felony in Pennsylvania. When I looked it up for Iowa to come here tonight, the lowest level of felony in Iowa is not $2,500. it's $1,000. So again, this soccer pop who starts out by just saying, oops, I made a mistake of $20. Oh, nobody caught it. I'll pay it back when I get a chance. Oh, I need another 20 for gas. I need another 20 here. By the time that person gets caught, it's a felony. It's not a misdemeanor. There's a little way, and this is a very frustrating part to me. I have told libraries, if you have a problem with your director, and she is doing what she shouldn't do, and she's not giving you information she should, you have to report it. They'll report it to the district attorney. Unless they have specific cause and evidence, the district attorney calls me and says, can you go in and try to do something about this? I can't. I have no authority. I don't have any law enforcement, any other authority. Call the IRS. The IRS doesn't get involved. It takes years, even when we can tell them it's $100,000, $200,000, for them to get involved. They're supposed to, they don't. So that library I mentioned is one of the examples where a board member finally went to the news media. Then the other board members are furious with her for doing this, but it did resolve the problem. Part of the problem is nobody is helping, even if you want to deal with something you think is wrong. Nobody can help. And I'm trying to deal with legislation in Pennsylvania that would make that different. But any legislation we pass in Pennsylvania is going to put more overhead, let's say, on these volunteers that run these organizations. We're already having a hell of a time getting volunteer firefighters, getting EMTs, getting volunteers for any type of organization. We're scrambling. We're giving tax credits on our state tax return to volunteer fire companies if they'll become a volunteer. We're finding all kinds of ways to get volunteers. And the legislators have told me, we can't put anything into place that's going to be another roadblock, another hoop that they got to run through, your internal accounting controls or something like that. Because we need volunteers and you're just going to turn off more people. So it's a really lose-lose kind of situation in that way. The governing body has to be the one who is watching. The agencies can do very little. Sometimes when there really is proof, and it's already happened when there's proof, then, county district attorney or federal, some of these did go to federal prosecution that we've looked at tonight. Nobody wants to question the treasurer. They will want to be rude. I try to convince people, I'm an accountant, but I try to convince them, you're not being rude if you're doing what you're supposed to be doing. And the treasurer should not be insulted by your questions, and you need answers to those questions. I've seen some of this take place. It was actually with a tax collector, not a nonprofit, but it was a he. He got away with so much money over a period of time by just not adding the numbers correctly when he turned in what he collected. Nobody double-checked his arithmetic. And he got away with a lot of money until it was discovered by a very good CPA. So, at the end of a session, when I've gone through a lot of this stuff, and I take more time to do it than we have tonight, I'll get the question, or I'll know I should answer the question. So what are the priorities? If you're not going to do everything, what should you do? And I list these as the 5. Overarching, more than one person should be involved in every activity and transaction. And the two people should not be closely related. Hopefully I've made that point tonight. Someone other than the treasurer should prepare a monthly bank record. Never have only one person count cash. Rotate the treasurer responsibility and require a treasurer's report at every meeting. If I could get organizations to do one of them, but 5 of those, it would be great. We wouldn't have the problem, and we would have a lot more benefits for those in our community who need those benefits with monies that are still there to provide those benefits. Now, I'm not going to go through this, but you can look up the tax exempt status on an organization. You can see if it's been revoked. You can see what returns they filed. You can look up all kind of information. It's public information. And the IRS provides, they've changed the way they do it in the last couple of years, but they provide a way that you can look up information by zip code, by city, by a number of different ways. Free and open to the public. It's called Tax Exempt Organization Search. There's the acronym for it. And it is very useful if you do want to see if an organization you're going to donate to is tax exempt. Red flags, you know, I usually put this in there. This is standard kind of stuff. Somebody who's living beyond the means, somebody, again, who had that operation and doesn't look like they are doing very well a year later with recovering from that operation with regard to, you know, are they as sharp as they used to be? Are they stressed more than usual and so forth? Never takes time off. You know, in businesses, you might know this. When are embezzlements discovered? When somebody gets in a car accident. They never take vacation. They're such a dedicated employee, they never take any time off. That's because they're stealing money. They're doing lapping, they're doing kiting, they're doing something else that we talk about in business. And it's when they get sick, they have a car accident, and somebody else does their job, that it is discovered. So you always, in banking, you have to take vacations. Many companies say you have to take your time off. Sometimes they require 2 weeks at a time. So, you know, it's a span of more than a day at a time or just 1 week at a time. Vague answers to questions, defensive answers to questions, late charges and penalties for unpaid bills. This came from a CPA, by the way. This was a slide that he helped me put together. That's my contact information. I always put that at the end of everything. I mentioned that I did get the statistics and many of the other things in here. I didn't do, you know, like an APA kind of style attribution, but I do have the bibliography at the end here. I think it is only 2 pages. It is. So to try to fit something in an hour tonight to talk about what I'm passionate about with regard to volunteer service and service to the community, that's what I thought might be a useful PowerPoint. And it is 8 o'clock, so at least time management, I got that nailed. So.
Yeah, we'll take questions.
Any questions? Any comments? Any criticisms? Yes, ma'am. How do we get a hold of it? If I make it available, how can you make it available to anybody who is here or anybody else, you know, tonight?
Well, that's a good question. You can certainly contact me, Tracy Tumlaw, I'm the chair of the business department.
Oh, thank you. I'm Tracy Tumlaw. I'm the chair of the business department here at Mount Mercy. So if you get a hold of me, I will certainly make sure that that's available as well.
I'll make sure. Well, I've sent you a previous version. I did make a couple corrections. I'll get it to you. So it's available. You know.
Questions?
I just interested in further exploring the pressures that are happening in communities that can cause these problems, because you kind of touched on them, how things have changed, and the problems might be more likely because of those changes. Governments providing less service, gambling being legalized, changes in demographics in rural areas that makes it harder to get volunteers and therefore harder to find people that will be redundant. And I just wonder what laws would you ask to be passed in Pennsylvania, or what can society do to try and help change the conditions that help lead to these things?
Wow. There isn't a lot. I mean, I think you know that when you're asking the question. It's almost a rhetorical question. So are we going to stop gambling as being legal in Pennsylvania? No, it is big money. Can I say much about it being the cause of the problem? No, a significant board member where I work is from a casino. So, quite frankly, and is it the real problem? Well, again, if we had the internal controls in place, it wouldn't matter if you're addicted to gambling or not. The money would not be missing. So that's what we need to focus on. When I mentioned dealing with legislators and looking at the lobbying arm of the Pennsylvania Institute of CPAs, it's legislation to mandate a monthly bank record. Not really, to mandate something that these organizations do. That's where we run into the problems that you outlined very effectively. We're having a problem now in our communities. we're not going to make it tougher. Well, then again, the lose-lose kind of thing, as I said before, is you run the risk of the organization going out of existence and the volunteers' work not being there because they have had a theft that is too big for them to recover from. Really two questions you asked. What are the ramifications and what can we do to reduce those implications? It's a very difficult thing. Again, I'm an accountant. You heard what I said for an hour. What do I think should be done? People need to step up, be those board members, be those members of organizations. Make sure that they take an extra 10 minutes a month, 1 hour a month to do a bank rec or something like that. Ask the questions that should be asked. If you haven't had a treasury report for 5 meetings, insist on having a treasury report. It's not rude. It's really incumbent on us to solve the problem, and that's what I try to sell. I don't know that I'm really answering your question very well, but as you mentioned, you used the word pressures. It's like that with everything in life anymore. Things aren't getting easier, are they? Everything is getting more difficult because for a lot of reasons, and this is one of the casualties of that. Does that answer it in some way? Sort of. No. Yeah. That's okay.
You mentioned that fiduciary responsibility is critical of board members. If somebody's looking to join a board for the first time and isn't aware, how does one become aware of what their fiduciary responsibilities are?
Okay. Well, first of all, it's very simple. If you're going to be a board member and they do have a description of what the board member responsibilities are, you need to make sure that you're living up to those responsibilities. Okay? And most boards that you get involved in, of larger organizations, you're going to have just that. So I mentioned I'm a board member of Knapp. I got grilled on everything. I got oriented, so to speak. I had an orientation. It was a whole day of orientation on what is expected of me as a board member, which included donations, by the way. So as typical with larger organizations. Smaller organizations, quite often it's not in writing, and you don't have those type of educational opportunities to figure out what your responsibilities are. So then, really it comes down to common sense. I don't have a better answer. I mean, if you don't see a treasury report for those 5 months, you've got to see it. If you think there's something wrong, you can't just keep getting the answer, oh, I'll get it to you next month, or other answers that I've heard. I'm not going to have a good answer to what you're saying. It's more common sense. It's just being reasonable. It's if something seems, it's a different use of this old cliche. If something looks too good to be true, it's probably not true, kind of thing. So that's the best answer I can come up with. It's common sense. I'm sorry, that's as good as it gets. At least at 8 o'clock at night, which is 9 o'clock where I live.
So a lot of the things that you mentioned with like splitting up responsibilities and having the checks and balances, in the situations that you've ran into, has it been more of lack of knowledge on the part of the business, or has it been a choice the business has made, or is it like them just trying to rush and get everything set up for their business?
Yeah. And again, we're talking nonprofits, not businesses, but some of it certainly is not having the expertise, any business background. They're volunteering because, like I said, they're passionate about this cause. They're passionate about serving the people, the animals, the cause, that this organization's in. So a lot of times they don't have the business background, the expertise that you're learning from the students that are here at Mount Mercy who are in the business programs are learning. They don't have that. But the bigger problem is that some of them, again, it's common sense. I'm going to use that. It's common sense. They're just not taking the time. They're just not investing of themselves to look into, to watch what's going on. And that's frustrating, and that's what we find more than anything. Does that answer the question? Thank you.
When volunteering to be on a board, is it important to see if the organization has that directors and officers insurance as well to help protect?
Oh, yeah. Thanks for mentioning that. Again, when I do a longer one, I will actually have, you know, some slides from an insurance agent that I work with. I'm not trying to sell that insurance agent, but I will have, you know, the errors and omissions, the responsibility, the insurance for that. And many of the organizations that I've worked with, even if they haven't done something else, they've taken out that insurance. You're absolutely right. And then sometimes we'll do bonding, you know, with certain situations it's worthwhile to get a person bonded. But yeah, the liability, it's not that expensive. It's fairly cheap, or you probably know, and it's fairly cheap. I should have included that tonight, I didn't think to. You're right.
And then smaller organizations that have such a hard time finding treasurers, if they've had a treasurer that's been there forever, can't you design controls to oversee what they're doing so they can be a treasurer for 30 years and yet have enough oversight over what they're doing so that things don't happen?
Certainly what we have are, you know, what I've talked about tonight, and I would talk about more with more time, are compensating kind of internal controls. I'm going to keep calling them internal controls because that's what they are. So if you're going to have the same treasurer for 30 years, like I mentioned, if you do have the bank recs being done, if you have several other of these internal controls, it's very difficult for anything bad to happen. Two people are counting cash, you know, anything, think of them all. So you're absolutely right. I'll do anything with these organizations to try to make it workable for them. If they say that's off the table, we are not changing treasurers, okay, then you really need to do this and this. And your treasurer should be willing to be a part of that.
And oftentimes they maybe want to change the treasurer, they just can't find another volunteer.
That's more often than not, you know. Fred is willing to do it, you know. I had a student I taught, she's a CPA now. Her volunteer fire company wanted her to be treasurer. And she said, I'll only be treasurer. This had nothing to do with me. She told me this afterwards. I'll only be treasurer if you have somebody else do this, and therefore we have checks and balances, somebody else like a bank rec, but she had other things. They didn't want to do it. I won't be treasurer. She refused the position, you know. So certainly, again, I use the term common sense. Certainly, you know, we all have to look after this. We don't want to be, no matter what else are the consequences, you don't want to look at it and say, oh, I could have stopped that $20,000. I could have stopped that person from, you know, having his or her life affected by, you know, watching what was going on, questioning, putting some of these things in place. There's one, Tracy.
This is more of a comment, but I serve on several local boards, but the cost of a review and an audit has just gone out of sight. I'm on one small organization, an ecumenical center, and just to have a review is $3,000 to $6,000. And I serve on another large organization, and the cost of an audit is over $20,000. So, and that's just not going to go down.
No.
They're enhancing the accounting standards to require more, the nonprofits to do more reporting, and it just takes a lot of time. And so I really appreciate, I'm going to check out your website, but this internal audit, I think, is going to have to be part of the solution, that these small organizations are just going to have to adopt this internal audit.
Thanks
do whatever.
Yeah, you're absolutely right. And again, I will try to convince them that having a seat, what I do with some organizations when they can't afford it, and you're right, it's become so expensive. Even my friends who I try to get to do it cheaper, you know, the CPAs I've worked with or been a partner with them at some point in my career, they just can't do it. A lot of it has to do with all this stuff too. I mean, they have to pay the insurance, the malpractice insurance, to protect against something they don't discover. In addition to the influences you mentioned also. What I've done in a few places where I think they can afford an audit, and a library is a good example recently, they have an audit every third year. They have a review every other year. Now, they can afford it, you know, in spite of the dollar amounts that you just mentioned, but they couldn't afford an audit every year. But the internal audit, what I can also send you if you want to give your contact information to, or I'll give you my card, and then you can email me if that's okay, and I'll email it back. I mentioned up there that I wrote for our Department of Community and Economic Affairs, you know, the internal controls that they have to put in their bylaws or an addendum to it to all volunteer emergency service organizations that want to file for grants. There's a really good, and probably expanded beyond what we have on the Misericordia site, process for an internal audit in that document. And I put it together from a number of different resources. I'll give you my card, just remind me when we're done. And then if you email me, I will email you back that document. It's not copyrighted or anything, and the state doesn't own it, so I'll send it to you. You can pick and choose anything that might be useful to you from it.
Okay, thank you. I was going to say too, even that rotating every few years, most CPA firms charge more now if you don't keep a review or audit going, because they usually lose money the first year they do a review or audit, and so it takes several years before they actually start making money based on their time. And so alternating the years, although it sounds good, it's just, you'll end up paying more perhaps.
I'm a college professor, I'm supposed to sound good. Even if it doesn't work, I'm supposed to sound like it does.
If you have a regular, every other year, every third year audit, then the individual will only steal in the off years. If you can't afford the audit, an audit is supposed to only detect material instances of fraud. Right. So small, and it's a large organization, that's a pretty significant amount. They're not going to catch the smaller dollars.
Yeah.
If an audit isn't required by a funding agency, you could instead hire the CPA firm to come out and do like an internal control review and help you design procedures, controls.
Definitely.
And then you don't need the audit. Then you have the 3 individuals or whatever that make sure all the transactions are looked at.
Perfect. And one-time investment. You know, maybe have it reviewed every 10 years. Have, you know, the auditors or the CPA firm look at it every few years to make sure it doesn't need to be updated. But have them design the controls. Again, that's what we're trying to do with very small organizations. But if you can afford it, that's a better approach. Yeah, definitely.
Okay, Dr. Croop, thank you very much for a wonderful presentation. And Barbara, thank you so much for making